Hi, good morning, all. Is my voice audible? Please type in chat. Okay, okay. Thank you. Yeah, got it. At the end of the lecture, I will share you one Google form for attendance. Okay, so later, once we meet physically, that time we will take a physical attendance. Okay, we will start this today's lecture. Okay, is this window visible? I'm sharing PPT. Does someone put in chat? Hello, is my screen visible? Okay, so start. We will start this session, today's session. So welcome all. Good morning. My name is Prashant Jadhav. I'm teaching you accounting for everyone, and I hope you know why we have selected this subject. Some people may not be knowing, or some people may be interested. See, as every engineer, you should have financial acumen. Financial acumen means what? You must have something. Means financial terms should be known and how financial things are working. So accounting is one part of the financial. The finance is a very you can say uh, very vast topic. Okay, now, why engineers should know? See, most of you are from computer IT background. Some of them are from AIDs, AIML. Okay, so most of the people are going to work in a service industry. So there are actually two types of industry. One is a product. One is a manufacturing industry. Second is a service industry. Now, in service industry, major in manufacturing industry, let's say the products are manufactured. The actual products are manufactured. Means what? The products which you can touch. These are called as a manufacturable products. These we call as a tangible products. For example, your mobile phone, your car, aeroplanes. These are the products. These manufactured. Okay. Then there is another type of industry, that is a service industry. In service industry, um, these are non-tangible products. Non-tangible means what? You cannot touch it. For example, banking system, banking service. So where you are going to submit some money, you are going to deposit some money, then you will get some service like fixed deposits, or you may take a loan from banks. Okay, so this kind of things which are going to help for your uh, daily life as well as professional life. Okay, so loans are not only given to individual, loans are also given to start businesses or to do more improvement in businesses. Okay, so this is one kind of service industry, banking finance system. We call it as BF, banking and finance, banking finance and insurance, BFI. Okay, now there are some other service industries. For example, education service industry. So our university comes under education service industry. Then there is a hospitality is a service industry. Hospital Hospitality means what? Your hotels, restaurants, resorts. So these are coming under hospitality service industry. Then there is a what we call hospitals. Hospitals comes under healthcare industry. Okay, so these are the service industry which are going to provide you definite a particular amount of service. Okay, and for that they may charge you. Okay, now these all industries, whether it's manufacturing or service industry, are being controlled by or being efficiently operated by some softwares. Okay, so these softwares are what you are going to make it. Okay, so you are going to make the softwares on this. So you are going to create softwares on it, right? Acha, meanwhile, if my voice is not audible, or if there is any error, you please message in group, okay, in our WhatsApp group which we have created. So there, if some problem is there, some problem with my voice, or some problem with the uh, screen presentation which you are looking, okay, so that you have to report on WhatsApp group. Now, let's discuss some real facts. See, you have completed your first year of engineering. Now, why you are going to learn this subject? That's what we are discussing here. Once you have a financial acumen, then you can make various financial planning. So, from where money is coming and where money is going, this is what very important part of either your personal or professional life. Okay, every company is dealing with the managing finance. Now, this finance management is not recent. It is coming since thousands of years before. Whenever there was a money, initially money was not there, so barter system was there. Okay, I hope you know what is a barter system. Okay, so so how to manage this money efficiently? How this manage the money so that you can keep a track record of money. That is what there is in accounting. Okay? So in simple words, accounting is nothing but it is a systematic way of managing the flow of money. Okay, it's a recording, it's analyzing of the flow of the money. Okay, so the record maintaining is very much important here. Okay, there are lots of softwares which are working on accounting. See, the invention of the computer. Okay, invention of computer was there to do some calculations, but the professional application of computer was started when there was a requirement of managing money. So for banking system, for financial management system, computers being used. Okay, so majority of the programs which were made on initial level. Okay, now you are looking this Windows operating system. Okay, there is a Mac operating system, then there is a Ubuntu, there are open source operating system. Before Windows, Microsoft was using DOS operating system. That is it was having only black screen and only simple coding is required. So the banking was very by using of computers in banking is very used, and the banking system or the money management system has been uh, more facilitated with the help of software programs. Okay, where requirement of many initially in US or in European and Gulf countries. Okay, somewhere in 1980s decade, at the end of the 1980s decade. Okay, there was a more requirement of this kind of people who are making some simple programs on C language. That time there was a one language like a Photon. Okay, so these two, three simple programming language were there on which people were balancing their people were managing the flow of the money. Okay, mostly banking companies and other manufacturing companies or other companies, service providing company who are managing the money through computers. Okay, so here you are going to learn some of the basic concepts of accounting, basic concepts of financial terms. Okay, and before going to the subject, let's see what is a syllabus. Okay, so I'm going to show you the syllabus copy. Okay, so this is your syllabus copy. Here I have written all the course. Okay, all the branches because it is for all the branches, and except CSBS for all branches the subject is there, right? You should know. See, you may have played games. Okay, you may have played racing games or shooting games. Whenever you are playing games, uh, during play before playing game, if you know what is a map, who are the bots, who are the enemy, then you can make the plans. It's like this. So you should know your what is the subject, what is the content of the subject, how the scheme of the subject is there. Then you can attack on subject and get a good score. Okay. So think in that way. So you must refer to the syllabus copy. What is written in the syllabus copy and which are the details. Okay. So whenever you go for preparation of the exam, that time you will be ready. Okay. And always be ready with always keep on doing continuously learning. For example, we are going to take uh, CA1 and CA2. Okay, CA1 is coming in just next to next Saturday. I think somewhere in 18th of 18th of July will starting your CA1. Okay. Now it is shown here 10 marks. We will conduct for 20 marks, and that will be converted into 10 marks. CA2, we will see how it can be taken, whether it is assignment based or question based or anything, because there is a different assignment and tutorial, so it will not be an assignment based, it will be a different project based or something different way, or we will give questions and you have to solve the questions into the classroom. Then there will be some marks for assignments. Okay, we are going to give you 3 to 5 assignments, mostly 5 assignments will be there, and its marks will get converted into 10 marks. Not 5, 6 assignments, there are 6 modules. So there will be 6 more assignments, 1 assignment on each module. Then we will conduct one quiz, one special quiz at the end of the semester somewhere, or I will conduct 2 quizzes in between. Then there will be one small either surprise test or capstone project. Okay, or we will take open book test. So that we will decide little later. See how time permits us. Okay. So this is what your scenario. We will conduct CA1 and CA2 both of 20 marks, and that will get converted into 10 marks. This 10 marks is for assignment. 5 marks are for your either quiz or seminar. 5 marks for your the surprise test or open book test. And your final end sem exam will be for 60 marks. So for 60 marks, paper will be for 2 hours. And so this total will become 60 plus this total 30. 60 plus 30 is 90. Okay. So 90 marks will be your total subject marks. Okay. So to study this subject, you don't require prerequisite. That's why we are not conducted your prerequisite. No prior knowledge is required. So the same kind of subject is there for 11th commerce. Okay. For them, it's required, and for you, why it is required to have a extra knowledge, to have a general knowledge. Okay. So once you have a financial, see, whenever suppose you are working in a software company, you are developing a software, right? Or you are doing modifications in a software. Now, see, this software has to be delivered to customer. Now, whenever you are going to deliver the customer, then only your company will get a payment. Then only your company will be in which you are working will be in a profit, or they will get some earning, right? Now, see, um, even if you are not working directly on a financial software, or you may be working on somewhere service software, somewhere, let's say ERP software or any other software, but uh, uh, if you have a proper financial knowledge, then you can you can do the things very efficiently, and you can implement this knowledge whenever you are doing something, right? So this is important. I think as per NEP, they have government has insisted to put financial kind of terms in engineering. Okay. So this course, let's read this course description. This is very important. You should know. This course provides fundamental understandings of financial accounting principles. Okay, you will get fundamental understanding of financial and accounting principles. It's individuals from all backgrounds. It's useful for individuals from all backgrounds, and learners will have the skills to interpret financial information. Okay, you can develop some financial softwares also in future if you want. Right. because many companies require this financial software, and they don't want to uh, purchase ready-made available. They may require customized softwares. Okay, in ERP system they have some um, they have some special models of finance and these things. Okay, now which are the course objective? Course objective is what you are. Just hold for 1 minute. Okay. So we are looking for the syllabus. What is a course objective? So course objective is what? To introduce financial accounting to the learners with no prior commerce background. So it's not required commerce background. Okay. Then develop some foundation skills for recording, managing various financial transactions. Means uh, accounting is nothing but you're recording the financial transaction, managing financial transaction. Okay. Then this will enable learner to analyze and interpret basic financial statements effectively. Financial statements are your account balance sheets, okay, income statement. These are what we are going to see. Okay, your task will not be there to make a balance sheet. Okay, balance sheet is a very complex thing. Your task will be just to analyze what is a balance sheet and which are the constituents of the balance sheets. Once you know this thing, then whenever it's applicable, then you will be a knowledgeable person. Okay, then enable learner to analyze and interpret basic financial statements effectively. Which are your course outcomes? These course outcomes are linked with your modules. CO1 is for your module, CO2 is for your module 2 in the same way. So your first course outcome is what? Demonstrate and understanding fundamental sums. So in first module, you are going to see the fundamental terms and which are your business operations, which are your financial operations. Okay. Then in second module, you will see financial transactions. Okay, using double entry system. Okay, double entry system, and then there are three types of way. In double entry system, there is a credit system, there is a balance debit system. Okay, then prepare ledgers, then cash books, bank reconciliation statements. So these are some simple. We are going to not we are not going to be more detailed like a commerce student. It's like just you should have a glimpse of what is happening in financial transaction. That's what you're going to see in your CO2. In CO3, um, you will prepare financial statements including trial balance, profit lines, profit loss accounts, balance sheet, cash flow statement. Okay, so these things are there manually and using software. Mostly we will do it manually. With the softwares means what? There is a Mostly people are using Excel. Then for accounting, there is a very famous software that is a Tally. Okay? So Tally is most widely used in India for accounting. Then utilize accounting software to manage financial records. But here we will see the basics of the things. Then interpret key company account terms, analyze financial statements and annual reports. Okay. So now here you should give more focus. Interpret key company account terms. Okay, because this is what is expected from you. You must have obviously you must have a knowledge of PL statement, means profit and loss account, profit and loss statement, balance sheet, cash flow statement, right? But if you want to go ahead, if you want to grow, if you want to be at the top management level, then you must be more focusing on this topic, because this is what people are doing. Means, uh, see, even if you are in a technical company, you may be working on a technical company, or if you want to do an MBA in future. Okay, so these analyze of the financial statement, this is very, very, very important in future job perspective. Okay, so if you have this knowledge in right now, then that's more advantageous. Then analyze management reports, including governance. CSR means what? Company social responsibility, business responsibility, and corporate governance reports. So these are also another thing. But this is what more uh, focus or more knowledge you must take in this topic. Okay. So these are the terms. I'm not going to read it, but if you, I will share this syllabus copy once it's finally verified. Okay, it's done. But, okay. So it is desirable that learners be required to download annual reports of business organizations from the website and go through the content of the annual report. Annual report means what? Your this kind of thing. See, prepare trading, profit and loss account, balance sheet, cash flow statement, collecting necessary data from small business firms. If you are getting opportunity, if your parents are working or in any financial position, then they may tell you easily. Okay, you can do some projects on this. You can utilize your coding knowledge, your not only coding knowledge, you can utilize your analytical skills. Here, students of AIDS, AIML are there. Okay, so they can use ML, they can use AI to do analysis in detail. There are things, there are softwares, there are lots of companies working on some are already there in the market to deal with this account handling. Okay, so these are some books, but I will give you some notes. You can find this um, the content of from 11th standard commerce book also. You will be able to find um, content of this, but that will be very vast. So I will try to give you some notes. Okay, provided you are attentive in the lecture, because here whatever the things we are going to discuss in the lecture will appear or will be the more important. On that only the papers will be organized. Okay, so your final question paper and your internal exams question papers will be totally uh, organized with this topics, right? Now let's go to our slides. How many members have been joined? Only 49. We have 119 members. Okay. So meanwhile, if my voice is not clearly audible, you keep me informing on WhatsApp group. Okay. So let's go to our topic again. Okay. So first, we are going to see some accounting concepts. Okay. Now, what is accounting? Accounting is nothing but it is having, see this word accounting. Accounting is nothing but it's having some records. It's having some records. Okay. So accountancy includes bookkeeping. Bookkeeping means what? It's a having records. Okay. Bookkeeping means what? Keeping records and means entering the records. Bookkeeping means what is happening in bookkeeping. You are going to enter the records. Uh, you are doing classification of the entry. Okay, because see, some entries are from your vendors, some entries are from your suppliers. Okay. Acha, before going that, uh, I hope you know how the business is functioning. Okay. I will tell you one example of a company, how the company is working. Okay. And that we can link with the things. Okay. So first you should be able to know about terms. Okay. I'm opening one whiteboard. So I will share. Now see what is happening in a company. Okay. So if you take any organization, let's say it's a manufacturing company, and it is easy for understanding. In manufacturing company, you are producing something. Okay. What you are producing? You are producing you are producing some product. Okay. It can be any product. Okay. So what is happening in a company? Let's say you are making product A. Okay. So you are making product A. Now, this product A is made by a different set of raw materials. Okay. So this product A is made of a different set of raw materials. So these are the materials or materials which are coming to make this product. Okay. So arrow direction should be like this. Now you need to purchase this raw material. Now see, there are two words here. One is purchasing and another is procurement. Okay. So there is a difference between purchasing and procurement. So whenever you are purchasing something for office use, office or personal use. Okay. So if you are purchasing something office or personal use. Okay. So that is called as a purchase. Okay. That is called as a purchasing. But if you are purchasing something for, or if you're buying something for your um, for manufacturing or for your business, if you're buying something for your business, then that is called as a procurement. Okay. So if you have a company, you are manufacturing product A for which you are procuring something from different suppliers. So your procurement are doing from suppliers, right? These suppliers are also called as vendors. Okay. So these suppliers we also call as vendors. So vendors are the people from which we purchase or we buy a raw material which is going to use for business. Okay. See the difference. Okay. We are going to, the vendors are the people who are going to provide us raw material for business. Okay. Now, obviously, they are not going to provide us free of cost. We have to pay them. So we have to pay to these vendors. So this payment transactions will come in your accounts. Okay, this payment transaction will come to your accounts. Okay, so what is happening in company? Suppose you are manufacturing product A, you got a Abhi, now you are not, now there are two, three types of company who are going to manufacture depending upon the type of their product. Okay, let's take example of mobile phones. Okay, the mobile phones, let's take example of Apple mobile phones. So Apple mobile phones are not manufactured depending upon the orders given by the customer. Okay, one more simple example we will take. Okay, so you know that means if you are purchasing ready-made clothes from shop, suppose you are purchasing ready-made clothes from let's say Zudio. Okay, so the cloths are ready-made. So here cloths are there, and you are going to choose as per your size. But if you purchase a fabric, okay, and you want custom made thing, then you will go to the tailor. Okay, so the tailor will take your measurement and it will stitch cloths as per your measurement. Okay, so these are the customers. These are the customized. Okay, to the tailor, you will get a customized cloths, right? But in Zudio or in any cloth shop, you will get already prepared cloths. Okay, already prepared cloths, and you will buy which are close fit to your size. Okay, suppose your shirt size is 42, then you will purchase a 42 shirt size. But here your tailor can make uh, the your clothes as per your customization, as per your requirements. Okay, so here you have to select, and here you have a choice. Okay, so here you have to select from option, and here you have a choice. You will get totally customized thing. So this type of thing, this tailor type of thing is called as make to order. Okay, so there's some terms you should know. This type of thing is called as make to order, means as per order they are going to produce. But here they are keeping stocks of the items. They will first analyze, they will do some market survey, they will depending upon their expert people's predictions, expert people's forecasting, they will put some design uh, cloths into their stores and with some particular amount of quantity. So these are make to stocks. So these people, the company who are manufacturing ready-made clothes, let's say example of Levi's. Okay, so they are manufacturing jeans irrespective of the orders from the customers. Okay, so uh, they are just putting this we call as a push system. Means Levi's manufacture jeans, Levi's produce the jeans, and they push into the market, which are available in the Zudio, and if you can choose as per the size. But to the tailor, you will give him fabric, and he will make the things ready made. Or he may have a fabric, you can choose fabric from there, and he will make product accordingly. Okay, so this is what the difference you should know. So there are two type of manufacturing. One is make to stock and make to order. Okay, now let's come to our company who is manufacturing product A. Okay, so let's assume that you got order from your customer. Okay, so you are manufacturing product A, you got order from your customer. Let's say 1,000 quantity of your 1,000 quantity they require. Now once you receive the order from this, order means what? This we call as a, in technical term, this is purchase order or PO. Okay, purchase order. And okay, so this purchase order we have received. In purchase order, quantity of the items are mentioned, and the cost you have told them. Okay, initially there may be a discussion between customer and you, that and there will be a negotiation that we are going to provide you product of particular cost. Okay, So the sales department. So first, what the sales department of a company will receive order from or will make note of this order from the customer. Okay. Before that, marketing people or some companies have sales and marketing in collaboration. So you just understand what is happening in a company, then we will come to this thing. Okay. So practically, what is happening in a company? This is required, and depending upon that, you can make some softwares on them. Okay, because see, this everything is not for big organization. This is not done manually. This has to be done with the proper records, and that cannot be done with the manually. That has to be done with the softwares. And most of the software, let's say TCS, Infosys, Capgemini, Accenture, these people are making the software for managing all these things. Okay. Now I will tell you after this lecture, if you have a time, obviously you have a time, you don't have any more work. So you search about this software, SAP, or before that, you search about this thing, ERP. Because majority of your work, if you are working in a good organization, so they may be using this SAP software. Somewhere within your scope of work, you have to do interaction with the SAP, and you must know, every engineer must know what is ERP. Okay. So don't search right now. Okay. This is not a good time to search ERP. After this lecture, you search on internet what is ERP. And for managing ERP, SAP is the world's most famous software is being used. Okay. Now let's come to our company again. So you are manufacturing product A. Your sales department got order from customers that 1000, you got purchase order from the customers that 1000 quantity of products has to be made of product A. We are assuming that our product is make to order. Okay. So once we receive order, then only we will start processing. Now suppose today I receive order. Immediately I will contact to my, I will check in my stocks. I will check in my warehouses. Okay. So I will write somewhere warehouse. Okay. I will check what is my inventory level. Now this word is also important. So what is my inventory level? Now what is inventory level? Inventory. Okay, this word is important. Inventory means what? Your material. Okay. So there are three types of inventory. Okay, I will write here. There are three types of inventory. One is raw material inventory. Then there is in process inventory. Okay, I will write in short. One is raw material inventory. Second is in process inventory, and third is finished good inventory. Okay, so raw material inventory, in process inventory, and third is finished good inventory. Raw material inventory means what? The raw material is there in my warehouse, in my hand. Okay, finished good in process inventory means what? The material which is into the machines, means which is in a machining process. Let's say I want to manufacture something rod or something. Let's say best example, mobile phone. Okay, so the materials which are not in mobile phone, there is a let's say your LED screen is there, then body of the phone, then internal circuits are there, then there are PCBs, um, then there is a frame, camera, mic system. So these all are there. So this we will call as in process inventory. Okay, and whatever raw material we will purchase, okay, that we will call as a raw material inventory. And if your phone is ready to dispatch, that we will call as a finished good inventory. So managing this inventory is also a major task. Many companies are dealing with this because this increases your cost, and many softwares are working, many softwares are providing service to manage this inventory efficiently. Okay, so it's not only banking system where computer softwares are being used. In manufacturing planning system also computer softwares are being majoritarily used. Okay, then only you can do it efficiently planning, and you may have some records efficiently. Okay, it becomes very easy. Okay, so you need to remember this word. What is the meaning of inventory? Inventory is what your material either in hand or processed or finished. Okay, now let's come to our company again. So in company A, in your company, you are manufacturing product A. You got PO. Okay, you got PO from customer of 1,000 items. Your salespeople have made this entry into whatever software they are using, and then first they will check what is the raw material is available in my inventory, either raw material or the products which are left over from the previous order. Let's say previous customer has given me 10,000, or let's say 2,000 products, and let's say 100 or are leftover, means which we have made extra, and if they are available, then we can add it and we can manufacture less products. So we will check inventory status. So for what we will check? Inventory status. So what is the status of inventory? First that we will check, and then accordingly we will make our next planning. Okay, let's say I have some raw material available. Let's say I have a raw material, or I have inventory, a raw material inventory of 100 products. So to manufacture 100 products, my product is A product. I got order of 1,000. To manufacture 100 products, raw material is available from previous order. It is leftover, and it is still we can use it. Okay. So now I want to do what? Now I want to purchase product required for, or raw material required for, only for 900 items. Okay, so I will not go for purchasing 1,000 products raw material. I will purchase it for 900, because in my company 100 uh, um, 100 items of raw material, so sorry, items of required to produce 100 items, raw materials required to produce 100 items are available in my warehouse, and I need to purchase um, items for 900 items. Okay, raw material for 900 items. Okay, so these decisions we can take. Now this, so this I will give order to my vendor. Okay, now for that what I require, I have to do payment. Okay, so this procurement, for that I have to do a payment. This payment transaction we have to note somewhere. For that, accounting principles we are going to use. Okay, so we got the order, we need to purchase raw material. We will identify what quantity of raw material is there, and then we will decide who are the vendors. It's not necessary that only to the one vendor you are going to give final purchase, final order. Okay, it may be two number of vendors, or it may be 20 numbers, 30 numbers. Okay, in many big organizations, let's say in automobile industry for a car manufacturing, there are 1,000 number of vendors are there. Okay, for each car there are many parts, there are 1,000 parts are there, and these are coming from different kind of vendors. Okay, so to for that I have to give a payment, and this payment management is to be done with the accounting statement. Now this money are coming from where? To pay, you require money. This money is coming from your finance department. Okay, so money is coming from finance department. Now finance department may have money already available into with them, or they have to take a loan. Okay, so to start any manufacturing thing, suppose you have already set up a factory, then to pay to your vendors, to suppliers, either you required to uh, give money from your own, from the account, or from the balance is there, or from the previous company's profit, whatever earnings you have taken. Okay, so you have something like earning. Okay, we will call it as retained earning. This word will come in further slides. We will call it as retained earning. Retained earning means nothing but your profit from the previous order. Okay, so either you will pay from your finance department will pay it from your retained earning, or the money available in your bank, or through the loans. Okay, or they can pay it from shareholders. They can pay from share capital. So they can pay it from share capital. Now we will come to this topic also. What is a share capital, and what is its significance? You may have heard about share trading. Okay, so we will see how uh, basics of basic concept behind share trading. So you have so let's revise this scenario. Your manufacturing company, your manufacturing product A, which is made by different vendors. You got order of uh, 1,000 pieces of this product A from your customer. Okay, then you will check what is your inventory status, whether your inventory is have raw material for this product. Okay, count the available material, and then you have to send your purchase order to your vendors that um, what if how many quantity is remaining, and that you have to give to your vendors. Once now you're not paying to you're not going to pay them in advance. You are going to pay obviously after receiving this 900 quantity of material from your vendors. Okay, so after receiving your item, you are going to pay it. Okay, then you will start manufacturing. During manufacturing, you have to pay to your workers. Some workers are on monthly basis, some workers are on a daily basis. So depending upon that, you have to make a payment. So for that, suppose if it is on monthly basis, then you have to make a proper budget allocation that at the end of the month, at the 30th of or 31st of date of each month, you have to pay wages to the employees. Okay, so these wages are very important. Wages means salary. Okay, so you have to pay wages to your employees at the end of the month. So for that, you have to make a budgeting. For that, you have to make allocation. Okay, the only people will work for you. Otherwise, why they will work for you? Nobody is going to work for you, free of cost for you. Okay, so then so you have to make money allocation for this. Okay, so these wages are very important. This word will come in your balance sheet. This inventory word will come in a balance sheet. This retained earning word will come into your balance sheet. The share capital will come in the balance sheet. This vendor suppliers will come. This word will come into your balance sheet. Okay. So suppose if you are manufacturing, during manufacturing, you are going to pay wages to your workers, your staff, your office staff, your then you have to pay for transportations. Okay. So that transportation in technical term, it is called as logistics. Okay. Logistics and transportation is same, but logistic is what technical word. So if you use these technical words in your discussion, then it will show that you are knowledgeable person. Okay. Logistics. Then remember this word KPI. Whenever you are going for any future interviews, people are going to ask you about this KPI. KPI are nothing but key point indices, key point indicators. Okay, means suppose if you are working in any company, if they are developing any software or they are going to provide some services, then what is the thing which are giving them business for the company? Let's say you are working in a cold drink company, then sales of the cold drink will be your KPI. How much amount of sales you are doing in particular month or in particular period. Okay, so that is what your KPI. So key point indices of your thing. Now uh, how you are going to relate it with. So you have to say like that ki my work will help to improve the KPI of the company, which are the KPI sales, then efficiency, right? So in this way you can put it. Okay, this KPI is not going to come in your account subject, but just for information, you make a note of this. Okay, now let's come to this. We have to go. We have paid to our vendors that this much amount of money we are going to means we have purchased raw material from our vendors. Okay, raw materials from vendors we have purchased. Then we have paid them. Okay, some money we have paid from our retained earnings. Some money for that we have taken loan. Okay, some money we have taken from share capital. Okay, now, after completion of manufacturing process through the logistics, we are going to supply it. So now my product is ready to dispatch, and now my product is going back to customer. So after logistics, it will go to the customers. Then this customer is going to pay me. Okay, this customer is going to pay me. So customer will give me payment. It will go to my finance department. So customer will going to pay me. Okay, so here your accounting transaction will get reflected. So there, see here what you are getting money credited. You are getting money credited in your account, and you are going to pay to vendors. This is nothing but your money debited. So this is nothing but your money to the vendors. It is debited. These terms we will see in details in further. But from customers you will get money, you will get earning. Okay, you will get earning. Now there is a difference between earning and retain earning. Okay, so from here what you will get, you will get earning, and this is what you are making business means you are selling your product to customer, and customer is paying you. This is what you are earning. Okay, this is what you are earning. So the amount of money, the valuation of the items you are sending to the customer, that we call as a turnover. So that we call as a turnover. This word you may have heard. So turnover means what? Let's say turnover for 1 month. If any company is sending 15 crores of item to their customers in 1 hour, in 1 month, 10 crores of business, not a business, 10 crores of valuation of items they are supplying to their customer. Okay, then we will call it as this company have a 1 month's turnover of 10 crore. Okay, so 1 year's will become 120 crores. Okay, so yearly turnover will become 120 crores. For 1 month, it is sending 10 crores of material to their customers, not only for one customers, to other customers also. Okay, now there is a difference between turnover and profit. See here what is happening? You got payment from your customer. You got payment from your customer. This is what you are earning. Okay, now you had utilized your previous money for buying something from vendors, for buying raw materials from the vendor. Then you have paid the wages. So you have utilized money to pay the wages. You have utilized money to buy materials from vendors. Okay, that is what these are all what your expenditures. Okay, so these are nothing but your what expenditures. So you have made expenditures to uh what wages, means uh, you have made expenditure to the wages. You have made expenditure to purchase something from vendors. You have made expenditure for paying interest of the loan. You are taking loan from banks or loan from some other party. They will charge you interest. Okay, interest means what? Suppose if you are taking loan of, let's say, 1 crore rupees. Okay, so 1 crore rupees, and if you are going to repay within a year, let's say they are charging you 10% of interest per annum. Means after 1 year, you have to pay them 1 crore 10 lakhs. Okay, so this is interest. So you are paying interest to the banks from where you are taking loan. Or if you are if you are made share available to the public, then people have invested money into your share capital. So people are giving money to your share capital account. Okay, so once you get revenue, then you have to pay them profit of the share. So share profit you need to pay them. Okay, so these are all coming in your expenditure. You are going to pay bills. You are going to pay bills of the electricity, bills of the utility. Utility means what? Water or fuel you have used. Suppose your manufacturing company is heating something, then for that you may require gas. Okay, you may require oil. Industrial oil is a different kind of thing. Okay, so then you are using some utilizing or all the expenses, whatever expenses are there. So earning minus expenses will give you a profit. Earning minus expenses will give you a profit. Okay, so this profit is nothing but your retained earning. Okay, there are some more terms are associated with this, but just right now you understand this is what your retained earning. So earning minus expenses will give you a profit. Okay, now this profit is is with the company owners, whoever owns the company or whoever the managing board, so or the director of the company, they will be the profit holder. Okay, now you may hear this word EPTA. Okay, if you are watching Shark Tank, then you may hear this word EPTA. EB, earning before tax and depreciation. And earning before tax, then amortization, earning before depreciation tax, EB something, earning before interest, depreciation, tax, and amortization. Okay, so this is what your EPTA. So this EPTA is what will tell you. EPTA is the thing which will tell you what is my uh, performance of the company. Okay, depending upon that, people will invest in your company depending upon what is your EPTA. So this in Shark Tank, people, the sharks were or the investors were asking what is your EPTA, and depending upon that, they will make investment. Okay, so so this is what the financial terms are, which are interrelated with the manufacturing company. Okay, so in general in India, most of the, not only in India but in the world, most of the companies are operating in the same way. They may have some different task. The volume of the, depending upon the volume of the company, they may be having some other task, but general idea is this thing. Okay, so once you receive order, you will sometimes with the order they give some advances. Okay, and which you can use for payment to your vendors. You process the items from the vendors, you do assembly, you will do some manufacturing of the items, and you will create your product. Then it will get transferred to your customer. Okay, then your customer will pay you after submitting to your customer. Then your customer will pay you money, and this money minus your expenses will be your profit. And this profit you can use for your investment. So this profit you can use for your this profit can be used for further investment or expansion. Okay, this can be used for investment or expansion. Okay, so if you're doing some investment, let's say you're doing investment in some bonds, in some government bonds or some FDs or some in mutual fund, then you will get some more profit. Okay, expansion means what? You can increase the company. You can buy some more machines so that you can increase your production. Okay, so all the financial terms which are going through, or the financial things which are going through, are managed by your accounting principle, your accounting methods. Okay, so these all things are managed by your accounting things, accounting principle or accounting methods. Okay, so before explaining this accounting thing, this was very important to tell you. Okay, I hope you have understood something. Okay, I'm also doing consultancy, or I'm also helping some companies to make ERP softwares. So in that's why I have seen these things very closely. Different company have a different task they have to do in different ways. Okay, and we are using AI. We are using AI to manage these things. Okay, so that company can do their functioning efficiently. Okay, so AI is being also applicable in accounting. You can search on net. Okay, so AI is being used, or machine learning models are being used in your uh, this thing, what your accounting processes. Okay, now we will come to our subject. If you have any doubt on this, okay, you can put in the WhatsApp message. If you have any doubt, if you have not understood any part, you can put in WhatsApp message, and I can switch on your mic if anybody want to ask me a doubt. Okay? Instead of chat, it will be easy for me to look on a WhatsApp message. Okay. So how many participants are there right now? 47 only. Okay. Now let's come to accounting again. So accounting includes your bookkeeping and classifying. Okay, bookkeeping and classifying. Okay, accounting includes your bookkeeping and classifying. Bookkeeping means what? Keeping records. Classifying means you have to distribute from where you are getting money. Okay, that's why I explain every this company scenario. So classifying means what? Which are the accounts, or which are the money you are receiving from your suppliers or vendors. Okay, vendors or suppliers. Which money you are getting from vendors or supplier? Which money you are getting from shareholders, because you have to pay back them. Okay, which money you are getting from your loan because you have to pay them interest. Not only interest, you have to pay them principal amount. Principal amount means, let's say 1 crore loan you are taking. So it's 1 crore will be the principal amount and interest will be, let's say 10% interest they are saying. So 10% of 1 crore is 10 lakhs. So 10 lakhs will be your interest amount. So final amount to pay 1 crore 10 lakh. Okay. Then so this is about very important. Classifying is important in your accountancy. So after classifying and some more classification, to whom you have to pay. Okay. Okay. So uh, to whom you have to pay. You have to pay to your salary. You have to pay wages to the people. You have to pay rent. You have to pay bills, commodity bills. See, whenever I'm using this word commodity will include your electricity bill, your gas bill, your gas means gas is supplied for burning or some combustion is required in your factory. Okay. So all these things, utility and commodity bills will come under. So this classification is very important depending upon on which side you have to make entry. You have to make entry on either on credit side or on debit side. So you have to decide where you have to make which entry. Then only you are able to make a proper financial statements. Okay. Then summarizing. Summarizing means what? At the end of the statements, you will get you want some important terms. For example, retained earning. So retained earning, sorry, RE. So you want what is your retained earning? Then what is your EBITA? Earning before interest and tax. Okay. Taxes and depreciation and earning before tax, depreciation and amortization. Okay, we will see these terms in future. Right now, so these kind of things. Then what is your profit or retained earning? Okay. Then what is your total expenditure? Okay, what is your total expenditure? Total expenditure. Then what is your sales? Total sales. Sales means what? Suppose 1,000 items you have sold to the customer. So that will sales. And that will reflect to your earning. Total number of sales is equal to total number of earning. So you have sold 1,000 items. So you will get money from your customer of this 1,000 items. Okay. So there are different definitions. Accounting by Kohler. Accountancy refers to an entire body of theory and process of accounting. Okay. Now this is very important. Sorry. This is very important definition. Nearly every business enterprise has accounting system. It is means of collecting, summarizing, analyzing, and reporting in monetary terms. Okay, in monetary terms, information about the business transaction. So these four words are important: collecting the business transaction information, summarizing means we have seen which are the key values. Summarizing means what total profit you are getting. Then analyzing. In analyzing, what you want to find out what is my total sales, what is my um, um, which are my summarized values. Then you have to report to the director. Okay, so reporting means what? You have to create one statement. You have to create some statements. One of this statement is profit and loss statement. Okay, P&L statement. Then another is your balance statement, balance sheet. Okay, your balance sheet. Okay, your cost and account statement. Okay, so these are coming under reporting. Okay, so first you have to collect information, you have to summarize, then you have to analyze, then you have to make a proper statement. In what? In monetary terms, information about business transaction. So whatever are the business transaction, you have to make this kind of uh, thing. So this is what the one of the most relevant definition of the accountancy. Okay, accountancy. What is accountancy? What is accounting? Okay. Okay. Now next, introduction to accounting, and these are the branches of accounting. One is financial accounting, cost accounting, and management accounting. Okay. In financial accounting, we are going to see a journal, ledger, trial balance, and final accounts. We will see in future in details which are these things. Journal, what is a journal? What is a ledger? What is a trial balance? Which are your finance account, final accounts. Okay. Then cost accounting. Cost accounting means what? Here it will have a cost sheet. Okay. Then job and contract sheet means job means what? The thing which you are doing, the process costing. What is a manufacturing process costing? What is your operating costing? Suppose if you don't have a manufacturing system, suppose if you are a software developing company, you are doing a consultancy of software development. Okay. In consultancy means what? Let's say this is our college. Suppose we want one software to manage student data. So now suppose if you are a developer of this kind of software and we want a customized software, we don't want to use the software which are available in the market because they may take our data. So we will come to you and we will tell you ki you have to make a software for managing our student data, which we can share with the principal, HOD, and other people, and we can share your results to your parent and something somewhat like your unique layer. Okay. So suppose if you are a type this kind of company, then you are not manufacturing actual products, so you are not purchasing something raw material here. So what you are doing, you are hiring a people, means you may have a team of a people who are working on, let's say, Java.net. Some people are working on SQL, means SQL. Okay, some people may be working on Python. So with the help of any of this thing, you are going to develop a software. So you have to pay them wages. You have to pay rent of the office, rent of the or bills of the electricity. So these are coming under your process costing. Okay, so these are coming under your process costing, and there is something operating costing. Okay, so there are some differences in process costing and operating costing. In operating costing, actually your bills will come here. In process costing, uh, in case of manufacturing, it is easy. What is a manufacturing process cost? But in case of service industry, then some cost required for the processing something that will come under your processing cost, process costing. In operating costing, um, you are managing office. Okay, so office will come under operating costing, right? Then um, you are paying some bills. Bills will also come under operating costing, not in a process costing. Okay. Job and contract. Job contract means what? You are you are paying to your vendors, means your suppliers. Okay, so that comes under job and contract costing. Okay, means let's say we have seen example of manufacturing where we are sending or we are purchasing raw material from vendors or suppliers to them when we are sending our purchase order. That is a kind of contract that we call as a job and contract costing. In case of software developing company or in case of um, Let's say in case of a software development company only. Okay, so you want to create a 10 models. So out of 10, let's say two, three models, three models are being used by another small software development company. Okay, one of the best example I can give you is Sea Bridge. Okay, the Sea Bridge, the Atal Setu, right? It is coming from Shivdi to this Uran. Now, when we give contract, when the government of India has given contract to, I think this contract was given to Adani or Reliance. I think Adani company. Now they are not wholesalely building it. Okay, what they do, they have they are using subcontracting. Means for one part they have given contract to another small construction company. Okay, so they are using help of another small contracting company who don't have capacity to build this complete bridge, but who have a capacity to build some segmented items. Okay, so this kind of costing, which is coming under this kind of contracting, will come under also cost accounting. Okay, then management accounting. Management accounting means what? The management of the company, the directors, the CEOs, the CXOs, they want some data from your financial statement. Okay, so this is very important ratio analysis. There are lots of ratios. There is a profit ratio. There is a equity ratio. These all kind of ratios are there. We are going to see in further modules. So these ratios will tell you what is the performance of a company. Okay. So what is the performance of the company can be identified with the ratio analysis. There is a break-even point. Break-even point means what? Whether company is going to pay the remaining debt. Debt means loan. Okay. So if the company is going to pay remaining debt to their thing, or the company is going to be bankrupt. Okay, this can be identified with the break-even point. Okay, so how much close your financial thing is to break-even point will be got from this. Then standard costing, what is the costing of the company? And analysis of financials. So the analysis of financial statements. I think it is not appeared here. Analysis of financial statements is very much important for management accounting. See, your focus must be on this management accounting, okay, on a career point of view. Because when you are having higher position, then you are focusing on this thing. So top managers are going to look for this thing. Okay. Now AI is there. AI can even if you are non-commerce person, then there are some AI models. I will share you this information at the end of or at the end of the semester. So which AI tools can be used for balance sheet analysis? You can also search on net. Okay, they will give you this kind of through the balance sheet. If you submit the balance sheet on these AI tools, they will give you ratio analysis. They will give you break-even point. They will give you standard costing. They will give you um, different financial or management relevant values. Okay, now why these are required, why these values are required? Because once you know these values, once you know these ratios, once you know these points, the management people can take some decisions. Okay, you may have heard about this company have made layout of let's say 100 employees or 200 employees. Okay, you may have heard about Infosys had done layout of um, let's say 1,000 employees. Okay, now why they are doing this? Because they found this kind of employees are not suitable for giving profit to the company. Okay, so these people are not required. Okay, how they have analyzed this? So they have found what is the wages salary component. See, in any software development company, major costing is what? Wages of the people. Okay, so so here top management people decides, it's if these people are not useful, then it's better to say tata goodbye to these people, and um, and and the money which is saved can be used for some other projects. Okay, but this is not simple way. Okay, this is one of the most difficult way, because if you are If you're telling people to leave your company, then it's not like okay they will leave and go. While going, you have to pay them PF, you have to pay them their gratuity. Okay, so these are HR terms are there, and this cost is also big. Okay, so this decision you have to take. So if you have a data in your hand, if you pay this much amount of gratuity to the people, now gratuity is it's like, let's say if somebody is having 1 lakh rupees salary, if he's working for 5 years, then it may his gratuity will be around 4 to 5 lakhs. Okay, so uh, if you are laying off 1,000 people, then and of a different salary range, then this gratuity may go in crores, and that may be another financial burden. So this thing you have to decide ki whether you should choose option A or option B depending upon this ratio analysis. Okay. Now we will see different basic accounting transactions, basic accounting transaction terminology. Okay. One is business transaction, entry, narration. We will see this one by one here. Business transaction, entry and narration, goods, profit and loss, assets, liabilities, and net worth. This is very important. Assets, liabilities, and net worth. And capital and drawing, expenditure and types of expenditure, discount, goodwill, bad debts, debtors and creditors, sorry, solvent and insolvent. Okay, this is not related to the chemistry. Then accounting year. This you may know what is accounting year. We will explain it. Folio, insurance, and pride deposit. Okay, so we will these few terms. These terms are being majorly coming into your financial statements, financial analysis statements. Okay, so let's go one by one. Now I have explained you before this thing what is how the manufacturing companies example I have given you, how the money transactions are going on from where to where. Okay, so first we will see business transaction. Okay, business transaction is what? Any dealing of business that involve buying and selling of goods and services. Okay, it can be in a manufacturing company, it can be goods. In service industry, it can be service. It's not only software development, banking service is also there. Okay, in banking service, which are your products? Your products are fixed deposits, your products are mutual funds, your products are loan, your products are it can be saving account, credit account. This can also be a service products. Okay, so in credit account, you have to pay some interest to the bank. In loan, you have to pay some money to the bank as an interest. In fixed deposit, when you deposit some money to the bank, let's say you have deposited 1 lakh rupees for 1 year, then bank will give you around 7% of interest for 1 year. So 1 lakh 7% will become 7,000. So after 1 year, you will receive 1 lakh 7,000 money. Okay. So these all transactions which is related to business, buying or selling of goods and services in exchange of a value. This is very important. In exchange of value, you are not doing for free. Okay. So if you are doing for free, then it comes under goodwill. There is also one word goodwill for free or something that will come under goodwill. Okay. So in exchange of value, it's called a business transaction. Okay. And you may have a cash transaction, you may have a credit transactions. Okay. Cash transaction means what? You are directly paying money and buying the product. Credit transaction means what? Let's say you are giving some bond to another person, the written bond that after a particular amount of time I will going to pay you. Okay, this is a credit transaction. Okay, I can give you an example of credit transaction. It is being used in export. in my first job, I was working in export company, because they were supplying some items for the world's largest sugar factory in Sudan. That time, Sudan was a one single country. Now it is divided into North and South Sudan. So there was a Kinana sugar factory, which was world's largest sugar factory, for to which my company was sending materials. Okay, and there were some companies in Ethiopia, some companies were in Sudan. Okay, now whenever you are doing export, okay, now you are not directly going to deposit or now we were the exporter, so we were sending our materials to them, and they are going to give us letter of credit. That is LOC, they call it, letter of credit. Okay. Now, what is a LOC? Now, see, that company is in Africa, right? In Africa, let's say, uh, in Africa, they have account in their African bank. Okay. So they will submit their letter of credit to their SWIFT account, SWIFT. Okay. To their SWIFT account. And this letter of credit will come to our bank. So my company was having bank account in Bank of Baroda. So BOB, Bank of Baroda, World Trade Center branch. Okay, Cuff Parade. So there they were having uh, a office of international business branch. Okay, you will find many such kind of branch offices in Cuff Parade area or South Mumbai area. Okay, now once you receive LOC, that means what? They they have submitted their money. Okay, now it's in the SWIFT account. Okay, now this my customer, okay, will not touch this amount. Okay, I will not receive this account. Okay, unless this customer approves this. So customer have, so let's say we are sending material of 10 crore rupees. Let's say in international transaction happens, that was, it was happening in euros. So let's say they are we were sending material of 1 lakh euros. Okay, so this 1 lakh euros will be allocated, will be booked in SWIFT account. Okay, so that means I will get assurity that this person has paid to the intermediate SWIFT account, international SWIFT account statement. This is controlled by European Union and US. Okay, European Union and US, European Union and indirectly by US. Okay, that's why there was a Iran war issue. Okay, so these are some different issues we will discuss here later. So this business transactions has to be done with the SWIFT account through letter of credit. And so once my material is received by customer will give the approval, and then only this will get transferred to my bank. Okay. So this will give me, see, in international transactions, this company is sitting in Africa. Okay. They, how I will get assurance that once my material is received to their end, they are going to pay me. Okay, it may possible that they may not pay me, they may do fraud. Okay, so this is the transaction, this is a letter of credit which will give me assurance that this company has been submitted their 1 lakh euros in SWIFT account. Okay, then only I will send my material here. Okay, then only once they will receive, they will give the assurance, then only I can take it, it will get transferred to my Bank of Baroda. Okay, so this is what transactions of the buying and selling happens. Okay. The next term is entry. Entry is what? Recording of transaction in a proper form or method in the books of accounts. Okay. It's called an entry. So recording of transaction is nothing but your entry. So this word you need to remember, recording of transaction. Okay. In exam, in this I1, we will ask you these basic things. Narration. Narration means what? A brief explanation of the business transaction for which the entry is used. Means for which? For payment of the staff, for purchasing raw material, for which this entry is being used. Then goods. Goods means what? The commodities or articles in which the trade deals are called. Okay. So this is goods are being manufactured, mostly used in manufacturing or trading companies. Trading company means what? Our company was trading company when I was working. Okay, means they are not manufacturing something. They are purchasing material from India and they are exporting to the Gulf country. They were exporting to the African countries. So they are not manufacturing something. They are uh, collecting materials from different companies in India, and they are transferring to the uh, our clients. Okay, so these are the goods. Goods are the commodities or articles in which the trader deals are called as goods. Okay, for that business. Profit means what you may know. Profit is what? Excess of income over the expenses. Okay, loss is what? Excess of expenses over the income means what? See, in example, I have told you what is your earnings. A, so your earnings minus expenses will give you profit. Okay, earning minus expenses will give you profit or loss. If earning minus expenses is positive, then you will get profit. If earning minus expenses is negative, you will get loss. Okay, so profit or loss depending upon whoever is a greater. So if your earning is more than your expenses, then you will get a profit. If earning is less as compared to the expenses, you will get a loss. Okay, it's a very common sense thing. Then assets. Now, these are very important words. Assets and liabilities. What are the assets? Because here, what many people, many commerce students also get confused. What you have to put in assets, what you have to put in liabilities. Okay. So the property of any kind owned by businessmen is called an asset. Okay. For example, it will be a land. It will be land. Then it will be machinery. Okay. Then it can be an investment bonds. Okay? And investment bonds, the fixed deposits. Okay. Bank accounts. Then something which is going to give you money. Okay. So there is a main difference between assets and liabilities are what? Something are going to give you money. These are called as what? Your assets. And liabilities means what? Total amount payable by the business to others is known as liability. Means something which you have to pay, that we call as a liability. Means if you want to pay, if you are paying for, uh, uh, let's say if you want to pay a loan, so loan is coming a liability. You are going to pay interest to the loan. That is a liability. Okay. You have to pay wages. Wages means salary of employees. You have to pay uh, items. No, see, if you want to pay to vendors, okay, if you want to pay money to vendors, okay, that will not come under liabilities. The okay, that payment comes under liabilities, but the items which you have received, the inventory, the raw material inventory, okay, so this raw material inventory will be your asset. Okay? Raw material inventory will be your asset. Okay, so this payment, whatever payment you have to give, that will be your liabilities, and whatever the things which you are going to use to make a business, that will call it your assets. Okay, the net worth or own equity is what your assets minus liabilities. So your assets minus liabilities are nothing but your net worth or own equity. Okay, then there are some fixed asset, current assets, fictitious assets. Now these are not, this is not so important, but what is a fixed asset? Okay, so fixed assets are nothing but your land, okay, your land, machinery, okay. This can be your fixed asset. Now suppose if you are a transportation owner, means if you are a logistics supplier, okay, then your trucks or you have a taxi service, then your cars will be your movable assets. These are not fixed assets, these are what? Movable assets. Okay. Fixed assets will be your land, your machines. Okay, M/C is what? Your machines. Okay. So your land, machines, your factory, your house. Okay. Your house will come under fixed asset. Now current assets and non-current assets. These are two different things. Now what is the current asset and non-current asset? Current asset means what? The money which you are going to receive, okay, during current financial year. Now see, your financial year in India is from 1st April. Okay. So 1st April this year to 31st March next year. So your current financial year as compared to today's date will be 1st April 2026 to 31st March 2027. So if I am doing any payment, that will come in this financial year 26-27, which is starting from 1st April 26 and going to end on 31st of March 27. Okay. So if you are going to get money in current financial year, that we call as a current assets. So whatever the money you are going to receive in current financial year, means in this year only, suppose you have delivered items to your customers, means you have made 1,000 products. Suppose if you have made 1,000 products and payment of these 1,000 products are coming to your customers are and this payment is coming in this financial year, that we call as a current assets. Okay. But let's suppose he has not paid, or suppose you have made another order of, let's say, 1,000 products only, but which he is going to pay on let's say 15th April 2025, sorry, 2027. Okay. Suppose this money you are going to receive on 15th April 2027, that will come under next financial year. So this we will call as a non-current financial year. Okay. It may be um, mostly this non-financial transactions are nothing but your interest which you are going to receive. Okay. And if you are doing business transaction or if you are doing manufacturing in last month of the financial year, and mostly you are going to receive money in next financial year, that comes under non-financial, non-current assets. Okay. So if you are going to receive money in current financial year, that we call as a current assets, and the money which we are going to receive in next financial year, not only next to any, means not in current financial year, but it's coming to any next financial year, that we call as a non-current assets. Okay. So this is the main difference between, then introduction to accounting concepts, accounting principles are there, something. Okay. Accounting is a language of business. This is okay. Now, why accounting practices are important? To have a reliable financial statements, to generally acceptable basis of measurement. Okay, basis of measurement for how companies are compared, what is the performance of the company. Okay. Then valid and appropriate assumptions. Some assumptions we are doing. Uniformity in presentation. So overall, there should be uniformity. What is assets, what is liabilities, all over the India are the same. Then valid and appropriate assumptions, it is coming again. Then proper information to all. So these are the things. Accounting is important. Then business entity concept. This concept. So there are some accounting concepts. One of them is business entity concept. Now this is not so important from exam point of view, so you can ignore this. But let's see this. What is a business entity concept? This concept assumes that for accounting purpose, the business enterprise and owners are two separate independent entities. So business enterprise and its owners is what? Suppose I am having a company. Let's say I am having some company. Okay. So let's say I am having analytics consultant company, Visalytics. Okay. So these are doing analytics, they are supply chain analytics. And let's say this is my company, and I am a different person. So whatever owned by company is a different thing. Whatever owned by me is a different thing. If I am having a house of myself, so that is my personal entity. Okay. And if I am purchasing office for the company, that will be my business entity. Okay. So I can so suppose if the owner takes away from the business cash, means if he's taking business cash for his personal use, it is not treated as business expenses. Okay, if owner is using, suppose for this company, I'm using, let's say I'm using a car, okay, for office work, or I'm having a truck. Okay, if I'm using it, not truck, I'm not going to use for personal, but let's say car. Suppose car I'm using for personal use, then its transaction should not come in the business entity because this is for the personal use. Okay, but people do fraud on this. Okay. Money measurement concept. This concept assumes that all business transactions must be in terms of money. Okay. So in India, it is with the rupees. Then going concern concept, the concept says that businessmen will continue to carry on its services on future period of time. Okay, it means every business entity has continuity of life. So we will assume that this company is not going to bankrupt. Okay, so it will have continuity of the life. Accounting period concept. Accounting period means, as I said, what is your period of counting? 1st April. Accounting year is considered, financial year is considered 1st April this year to 31st March next year. So this is our current financial year. 1st March 2027. Okay. So in balance sheet or PL account statement, it is made with the accounting period. Now, let's say if we are making balance sheet for financial year, then we are going to use this. Sometimes balance sheets are made for quarters. Quarter means what? 4 months period. Okay, 4 months or 3 months period. 3 months period. Okay, accounting cost concept says that all the assets are recorded in the books of accounts in their purchase price, which includes cost of acquisition, transportation. Okay, then fixed assets are there. So everything is mentioned in the assets part, and the expenditure are made in credit part. Okay. For example, machine was purchased by XYZ Limited for rupees 5 lakhs for manufacturing shoes. An amount of 1,000 were spent on transporting the machine to the factory site. In addition, 2,000 were spent on the installation. Means if you are purchasing machine that need to transport, its transportation cost is 1,000 rupees from where you purchase machine to this thing. Then in addition, 2,000 were spent for installation Means install machine you have to install into your factory, which costs is 2,000 rupees. So total cost of the machine will now become 5,03,000. Okay. So this is a total cost. This must get added into your statements. Okay. Matching concept says that the revenue and the expenses incurred to the earn, the revenue must belong to the same accounting period. Okay, revenue means if this expenses, if the expenses are incurred, means expenses happen in current financial year. CFM means what? Current financial year. Then this revenue should also must be for the current financial year. Expenses means what? You have purchased something. Expenses means what? You have purchased something from your vendors, and revenue means what? Profit you have received. Sorry, not a profit. Revenue means what? Sales you have done. Okay, means you have sold 1,000 items. So 1,000 items ka money will be your revenue. Okay, then sales minus expenditure will give you a profit. But here expenses is for your current financial year, and this also should be in revenue and expenses must be shown the current financial. Okay, now dual aspect concept. Dual aspect concept is the foundation of basic principle of accounting. It provides a very basis of recording business transactions of the book. Now, this is what majority use here in the balance sheet. Uh, Assets, liabilities, and share capital has been shown. So assets is equal to liabilities for share capital. Okay. So we will see the transaction should be recorded into two at two places. It means both the aspects of the transaction must be recorded in the books of account. For example, goods purchased for cash has two aspects, which are giving a cash and receiving a cash. So either you are giving a cash or receiving this cash. So these two aspects are to be recorded, and the duality concept is expressed in terms of fundamental accounting equation. Assets is equal to liabilities plus capital. So dual aspects here is what? In the accounting statements, you must show what amount of cash you are giving and what amount of cash you are receiving. Okay, this is okay. So we will see these two important things: inflation accounting and what is a maturity. Okay. Now, inflation accounting. Okay, a state in which value of the money is falling, that its price is rising. Okay, money is falling and price is rising. Means suppose you may have seen during this war, the crude oil price has been increased. Okay, crude oil price has been increased. Okay, and this, but our payment has not increased. Okay, so the crude oil price is increased, but whatever the money we are receiving as a wages is not increased. Okay, or the taxes which we are paying is the same. Okay, so this is what inflation. So money is falling, but the price is rising. That is what technical definition of the inflation. Okay, so the user or decision makers gets an information which shows the performance. Okay, so the monetary items, income, and expenses do not show the correct purchasing power of money. Okay? Then maturity. This is a different thing. Maturity, it has not been tested. What is the maturity? Sorry, what is the materiality? Materiality is what? It's opposite of this. When when price are constant, price is constant, and money is increasing. Okay? Price is constant and money is increasing. Okay, so these are some of the important terms. Okay, we will stop here today's lecture. Now, if you have any questions, you can ask in chat. Okay, and I'm going to share you attendance link. This link has to be um, used with the DY Patil email ID only. Okay, this link has to be used with the DY Patil email ID only. Attendance you have to mention, and in attendance you must make sure that you are entering the details incorrectly. Okay, one question is there. Yes, Vimal, you can ask the question. I think I have unmuted you. You can unmute yourself and you can talk. Okay, in chat, I am going to put link of the today's attendance only. Okay, don't share this with other people who are not present today. We are also taking, we are also noting who are the participants came here and their activity. Make sure that you are putting your what your USN properly. If you make mistake in a USN, then we are not able to trace it. Acha, please don't send me share request because you have to access it from your DY Patil ID only. Those who have put attendance, they can leave the meeting. You don't need to give thumbs up here. You just, if you have done, you can leave the meeting.